It's another trading session and another day for milestones for U.S. equity averages. We're seeing the major averages higher today and the Dow eyeing that 21,000 level. Joining me now is Alan Valdes of SilverBear Capital. Alan, great to have you here.
You know, and you're 100% right. What a day. I mean, we saw the NASDAQ break 6,000 for the first time. It was only like, I don't know, 200 days ago, or we broke 5,000. So it's just been an amazing run here. And of course, today we're being really pushed by the earnings. We saw Dow Chemical with good earnings, but McDonald's has blowout earnings. I mean, not only did they beat on the top, but on the bottom line. So it was just a great day. Great day all around. We've had about 200 now. We've had a little over 100 S&P comes report. We have 200 coming out this week alone. Out of that 100, 70% have beat on the top line, and 60 have beat on the revenue line. So we're having a good earnings season.
Well, now that you've covered earnings, I want to talk about everything else that's happening in the global picture. So we have geopolitics as well as politics. President Trump is fast approaching his 100 days in office, and there are concerns about a government shutdown, as well as what he'll do in terms of tax reform and healthcare. But interestingly, we've heard the U.S. Commerce Secretary Wilbur Ross announce tariffs for Canada's soft lumber, and it's possible that we could see something in terms of the dairy industry for Canada as well. But bigger picture, what really matters and what does it mean for the equity markets?
Well, you know, the big picture is the taxes, at least this week, that's for sure. They're talking, the rumor is they're talking going from 35% corporate tax rate down to 15%. That would be a boom for Wall Street. You'd see stocks rally all summer long, no matter what happens. Minus some major geopolitical event. But yeah, that'd be a huge catalyst. The events that are in Canada, whether it's the lumber or the dairy, that's just tariffs, and we'll always work them out. That's not going to be a major problem. But the tax cuts could be a major problem, because cutting back, we're at 35% now, cutting back to 15% is great in the short term. We'll see a rally, but within 10 years, you'll have a $1 trillion shortfall. So it's going to be antsy to see how that works out. He could push it through, though.
Well, Alan, I think one thing to keep in mind is although we're seeing record levels for the NASDAQ as well as new highs for the other global equity averages, we need to keep in mind that we have a lot of event risk on the horizon. And you mentioned volume that we were seeing today. So what do you make of that?
You know, that's the one thing really troubling traders, that there's no volume. The volume right now is under 300 million. On a day where the market's up 200, 10 years ago, we would have been 300 million on the opening. So, I mean, things are really kind of slow here, and that's troubling. We'd like to see that volume pick up, that's for sure.
And last but not least, as we head into the rest of this week, we have more economic data. We'll get the first reading of U.S. GDP at the end of this week. So how important do you think those fundamentals will be this week?
They're not going to be as important as they will become July and August. But they are first quarter. They're always good to look at. But that's looking backwards, so we're going to have to see. But I think they'll be in line with what they're looking for right now. I don't see a major problem with GDP at the moment. Let's see what it works out. Remember, a lot of the guidance looks pretty strong, too, from these corporations. So overall, it could be a great year. And if Trump passes that tax plan, Remy, we're off to the races. We really are.
Okay, Alan. Well, as always, thank you so much for your insight, and thanks for joining me today.
Thanks for having me, as always.